Hello everyone, this is Tom Fox. I'm the Compliance Evangelist, and I'd like to welcome you to the August edition of my 1 month to a more effective compliance program series that I'm running throughout 2017. This month will be 1 month to more effective continuous improvement. My sponsor this month is Affiliated Monitors. Founded in 2004, Affiliated Monitors provides professional, independent integrity monitoring and ethics and compliance assessments nationally and internationally and across all industries. With its knowledge of effective ethics and compliance programs and cultures, Affiliated Monitors is respected for its work as the corporate monitor on matters ranging from multinational corporations to small and mid-sized companies, and even individuals. Having served in over 500 monitorships, no one has more experience as an independent monitor than the team at Affiliated Monitors. For more information on how an independent monitor can help improve your company's ethics and compliance program, I would urge you to visit Affiliated Monitors at www.affiliatedmonitors.com. As I indicated, this month we're going to look at 1 month to more effective continuous improvement. We're going to consider auditing and monitoring, the different types of auditing that you can do, from third-party auditing, supply chain, data risk auditing, culture auditing against fraud. We're going to talk about control testing. We're going to look at continuous improvement through the use of big data. We're going to look at measuring effectiveness, risk-based monitoring, email sweeps as monitoring, and listening as continuous monitoring. I think you're going to find it a fascinating month, and I'm sure at the end of the month you will have picked up multiple lessons on what you can do to improve your compliance program around continuous improvement. This is Tom Fox. Thank you very much for joining me on this episode, and I hope you'll join me for the entire month. This 2017 1 month to a better compliance program podcast series is a part of the Compliance Podcast Network. Day 2, the Compliance Audit. In the evaluation of corporate compliance programs, under the section entitled Continuous Improvement, Periodic Testing and Review, it's stated, Internal Audit, and the following questions. What types of audits would have identified issues relevant to the misconduct? Did those audits occur, and what were the findings? What types of relevant audit findings and remediation progress have been reported to management and the board on a regular basis? Have the management and board followed up? How has the internal audit generally conducted assessments in high-risk areas? Interestingly, FCPA compliance has in many ways followed the paths laid out by corporate safety departments some 20 to 30 years ago when safety became a much higher profile in U.S. corporations. The Safety Committee and safety audits became mainstays of any best practices in the area of safety for a company. These techniques inform the Anti-Corruption Best Practices Compliance Program, one under the FCPA, the UK Bribery Act, Brazilian Clean Companies Act, France's CEPON II, or any other anti-compliance regime. Indeed, audits are specifically delineated in the FCPA guidance as a way to assist in the continuous monitoring of your compliance program. Such an audit can be thought of as a systematic, independent, and documented process for obtaining evidence and evaluating it objectively to determine the extent to which compliance criteria are fulfilled. There are 3 factors which are critical and unfortunately seem to be lacking in many safety audits. 1, an effective audit program specifies all necessary activities for the audit. 2, having competent auditors in place. And 3, an organization is committed to being audited. Auditing can take several forms in an anti-corruption compliance program. As a matter of course, you should audit the compliance program in your own organization. A forensic audit can collect and analyze accounting and internal controls evidence in your compliance regime. This information can be used to produce fact-based reports that can inform the decision-making process in inquiries, investigations, and dispute resolutions. The byproduct of a forensic audit can include remediation strategies to help a company mitigate and remedy procedural and internal controls gaps that allowed the underlying issue to occur. Further, internal audit can review a compliance process to determine if employees are following the prescribed processes or internal controls. In addition to the collection and analysis of evidence, an auditor's objective is to attest to the credibility of assertions that are under examination. such as the material accuracy of financial statements for which audited companies' management is responsible. Obviously, one of the functions of such an audit is to determine if further investigation is warranted. Once again, this situation points out the difference between having a paper compliance program in place and the actual doing of compliance, or as the Department of Justice might suggest from its evaluation of corporate compliance programs, operationalizing compliance. Even with appropriate oversight structure in place, you must actually do the work going forward. Another area ripe for audit in your compliance program is third parties. While there's no specific list of transactions or other items which should be audited when it comes to third parties, here are some of the areas that I would consider you may wish to review. Contracts with contracts with supply chain vendors to confirm that appropriate FCPA compliance terms and conditions are in place. Determine that the actual due diligence took place on a third party. Review the FCPA compliance training program for any vendor, both the substance and the attendance records. Does the third party have a hotline or other reporting mechanism for allegations of compliance violations? If so, how are such reports maintained? Review any of the reports going forward. Does the third party have written employee disciplinary procedures? If so, have any employees been disciplined for compliance violations? Next, review the expense reports for employees in high-risk positions or high-risk countries of your third parties. Testing for gifts, travel, and entertainment, which were provided to government officials. Review the overall structure of the third party's compliance program. If the company has a designated compliance officer, to whom and how does that compliance officer report? How is the third party's compliance program designed to identify risks that have been the result of any such identification? Review a sample of employees' commissions payments and determine if they follow the internal policy and procedure of the third party. With regard to petty cash activity in foreign locations, review a sample of activity and apply analytical procedures and testing. Apply the general ledger for high-risk transactions, cash advances, and apply analytical procedures and testing. As I've said several times, auditing is a more limited review that targets a specific business component, region, or market sector during a time frame to uncover or evaluate certain risks, particularly as those as seen in financial records. However, you should not assume that because your company conducts audits that it is effectively monitoring. In other words, the protocol is simple. Everyone understands the need to audit, but trying to cut costs and cut corners, and you will pay for it in the long run. So what are today's three key takeaways? Number one, is obviously auditing takes a deep dive into your compliance areas. I would really advocate an auditing rotational basis of your high-risk areas. And that, of course, leads to number two. Internal audit should test your key FCPA risk areas as part of their regular auditor rotation. These risk areas can be both geographic risk areas, can also be sales risk areas if you're selling to foreign governments. Number three, the findings uncovered in an audit must be used in your compliance program going forward. This is the key answer to the question posed by Wei Chen in the Department of Justice's 2017 evaluation of corporate compliance programs. In the operationalization, how did you use the information? It's one thing to audit. It's quite another to determine if the audit was effective or the controls are effective, but how did you use that information going forward? This is Tom Fox. I hope you've enjoyed day 2 in 1 month to more effective continuous improvement, and I hope you'll join me tomorrow for day 3.
This is Tom Fox again. I'd like to thank you for listening to this episode of 1 month to more effective continuous improvement in your compliance program. If you have listened to this podcast on iTunes, please rate this podcast. It was a help in our rankings, and also get the word out about the only daily podcast to help you improve your compliance program. If you have any questions, you can email me at tfox@tfoxlaw.com. This is Tom Fox. I'm the Compliance Evangelist, and you've been listening to 1 month of more effective continuous improvement from the Compliance Podcast Network.